The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 16th, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, that's something you and we must master each and every day. So let's go look at one of our belief systems out here. And that's this, folks. You must know that in any moment, a decision that you make can change the course of your life forever. The very next person you stand behind in line or maybe sit next to on an airplane, the very next phone call you make or receive, the very next movie you see, maybe it's the next book you read, the page you turn, maybe it's next workshop that you attend. Folks, all of those things could open the floodgates to open all of the things that you've been waiting for to fall into place. The question, the question each of us must be able to answer is this. What would we do? What would we do, folks, if we had the time? What would we do if we had the money? What would we do with those things? Actually, question is not what would we do if we had the means, the time, the influence, and the educational advantages. The real question is, what is it that we're going to do right here, right now, with all of the things that we have? Why? Because you have an amazing power within yourself. Let's go check out the power of these markets right now. The Dow is up 132 points. The S&P is up 12. You've got the composite up 14. The NDX 100, that's up 8.5. The NDX 100 is the laggard out there. It's up about 0.3%. Apple putting some pressure. Google putting a little bit of pressure as well. Inside the NDX, New York Stock Exchange, that's up a nice full 1 percentage point out there. That's positive. We're going to take a look at a little bit of diverging messages that the market is sending us. If we take a look at the VIX index, that's up nearly 2% this morning. That is up 26 cents, trade out at 1442. 1472, folks, write that number down on a pad of paper because the options traders are getting a little twitchy out there. So you've got a market that is up, but the options makers out here, the options market is saying, oh, not so fast out there. If we do take a look at Goldilocks, gold is up $14, trade out at $13.22. Silver is up 40 cents, trade out at $22.12. Light sweet crude back $1 right now, trade out at $107. We'll take a look at light sweet crude. I didn't do that during the last hour. Natural gas is up about a nickel right now. Our call-in number is 877-927-6648. If we do take a look at the ES Mini, we're going to start off here just simply taking a look at the EKG of the market just to understand what's happening as we speak right now. We had the market gap up last night. Now, whether or not it was on the news, you got basically two different wars going on out here. You've got the Syria issue, and we've got the, hey, who's going to replace Ben Bernanke? And are they going to be able to make as much wild rice as Uncle Ben did? Well, we had Larry Summers withdrew his name from the hat out there, so that's not the rabbit that's going to be pulled out of the hat. Maybe it's going to be Janet Yellen. The question is, what does that rabbit look like, and what is that rabbit going to do? Is there going to be more easing? And we'll find out some information here come this Wednesday. Well, we should find out Wednesday at about 1 o'clock or so when Uncle Ben tells each of us whether or not he's going to add some more rice to the mixture or whether he's going to start pulling some rice away. But we can take a look here at the ES Mini. What it did do last night, it gapped up, moved into the extremely overbought condition. When a market does that, it's got to work itself off. And it's going to do that by either moving sideways or pulling back. What we saw take place in the overnight session, we saw just simply price move sideways. What we saw take place at the open was price come back and test that breakout level being the gap. So we've seen one test of the gap. The low of that gap right here is the price point of exactly 1692. Now, you can see that the market went from extremely overbought to now where it's neither over, well, it certainly is no longer overbought. It is not exactly oversold, but it's close to those levels, and it's held that first line of support, which was that gap up. And we've seen the test of that. You see three tests of that gap and it holds, then you're talking about, especially as it works off this overbought condition, then you are off to the races and probably a new A to B equals CD up. If we do, as long as I've got the 30-minute chart up here on the screen, you can see I had noted for you on Friday these nice two little hammer candles that were out here. Those were lows of about 1674. Actually, the one from 2 o'clock in the morning was 1674. Those hammer candles held as support. You can see that price on Friday coming into the 1030 session got down to 1675 and then went ahead and closed towards the upper. It was a very tight trading range because your low was 1675. We'll take a look at that at 1030, and then the final close coming in at 415, out at about 1682 and a quarter out there. It's not a wide range, but we know where the bulls are hanging out, and we're going to find out where the bulls are hanging out right here, right now, at the bottom of this gap up, which is at the 1692 level. So far, so good, and the market has worked off that overbought condition. Now, let's go take a look at the indexes. I'm going to first actually go ahead and put up the VIX index, because this is important to be paying attention to. The VIX here rising, not declining, on a day when we've seen a nice gap up out there, and so options traders are getting a little twitchy. The problem becomes here, if you see that VIX index get above the 50-day exponential moving average, that's that blue wavy line going across my screen out here. That's the number is 1472. That would not be a good sign, because when the VIX gets above the 50-day exponential moving average, that's when damage can occur in the marketplace. So far, so good, but you are not seeing the VIX pull back out there. That is a little hidden signal out there that has got to make you say, something to think about. Nonetheless, let's go take a look at the actual indexes. Let's go see what kind of messages we can grab from the indexes here. Let's take a look at, we'll start off with the S&P 500. The S&P 500 right now trading out at a price of $1,700.54. What did it do this morning? Well, it gapped up above the open or the close on the high, intraday high on Friday. You're up above the 0.786 level. What the S&P 500 has done thus far, it has tested the August 2nd swing point. The low of that swing point is 1700.68. If you're a bull, you want to see it close above 1700.68. That's a number that you want to go ahead and write down inside on a piece of pad. How about that? On a piece of paper. Usually they're attached to a pad out there. So 1700.68. It's trading just below that right now. If it closes inside there, what does that set up? Excuse me. Number one, what it sets up is a test of the high, which would be 1709.67. I suspect that's what it wants to do out there, is go test that high of 1709.67. That's on the S&P 500. If we go switch over, take a look at the SPYs, take a look at the numbers on the SPY. Right now you've got the SPY trading out. It looks like about 170.83 out there. What the SPYs are doing is they are also tackling the August 2nd swing point. The bottom of that swing point is 170.05, so you're trading over that. The top of it is 170.97. So far intraday today, you've been up to 171.24. So it is up, and it has tested that high from August the 2nd. 170.97, and I said we've been up to 171. So volume so far today, 25 million shares in 45 minutes. The swing point out there only has 91 million shares. So price is pushing up into a swing point with volume. That is actually suggesting that even if you see a failure, and assuming that the volume pattern continues to hold, that's saying that, you know what, price will be back up there for at least another test. That other test could likely occur sometime between now and, I would say, Wednesday at about 1 o'clock in the afternoon, just before Uncle Ben, puts his bowls out on the rice and puts some Uncle Ben in there, and we get to see what it is going to be the next move with regard to the so-called tapering effect. But right now, you're pushing into that swing point. You gapped up. That means you got wide price spread. Just because it's a red candle, folks, that does not mean that that is a bearish candle out here. Because then what you would be doing is you would be overlooking the gap. So as we take a look at this candle out here, somebody might take a look at that and say, hey, that looks kind of bearish out there. I differ with you. I would say that the candle looks more like something like this. As soon as I can find my little tool out here. So here is what the candle, let's see, can I do it like that? Yeah, that looks like about it. And let me go ahead and we'll change this to a green. Little green candle out here. Let's, instead of yellow, let's go make it the green machine out here. A green machine, there we go. So there's the actual candle, because we're going to take a look at Friday's close to where it is at right now, and all that we're going to do is see if I can actually do this. I think I can. I can make a little line out here. In fact, I know I could. I'm going to make a Stevie candle. So we're going to go all the way up to about right here, which is the high so far. I'm going to go ahead and not extend that. We're going to turn that to black right there. We're going to make that black, and that basically is what today's candle looks like out here. So if we take a look at, because what we're going to do is we're going to go ahead and fill in the gap. We're going to start from Friday's close, and this is really the candle formation that you are looking at. So if you look at, let me see if I can grab it here. Oh, I'm not going to be real good at grabbing it because I can't connect those two together, but you can actually see the wick here. So if you were to take a look at this candle, here, I'll just do struggling to, there we go. I'm going to grab the wick. So there we go. We're going to take a look at this candle. This is the Stevie candle versus the candle that you were looking at right here. Does this candle look bearish to you as we take a look at it? And the answer clearly is no, it does not look bearish. So you want to make sure visually that, because what the mind needs to do, you need to be an artist. You need to be a graphic artist out there. And you need to make sure when you take, that's why gaps are your friends out here. That's why gaps can give you a ton of information. So right now what we know about these SPYs out here is it's moving into a swing point and it's moving in there with volume. And even though you saw a test of the high and even see this red candle out there, I'm telling you folks, that is not, in my opinion, if you go with the candle that I actually formed, which is really the candle that it really has formed thus far today, that is, if I go from types of candles from 1 to 10, 10 being the strongest out there, I would have to put that in probably about a 7-ish type range inside the market out there. So that is inside the SPYs, and there's a little morsel, a little chocolate morsel if you were making some nice chocolate chip cookies. Al, you got any chocolate chip cookies in the TFNN oven back there to go with some of our TFNN Java for the morning. I guess Al doesn't have any chocolate chip cookies out there. In any event, let's go take a look at the rest of the indexes. Let's go see what the Dow is doing. That's going to be very important as we take a look at the market, because look what the Dow is doing. The Dow here, take a look at that wide-ranging bar. We've seen some major wide-ranging bars inside the Dow, but more important than that is the Dow has gotten now firmly back inside that rising price channel. That was a rising price channel that it broke out of ever so slightly on the trading session of August the 15th, continued lower, came back and tested the June 24th swing point, did it on lighter volume, went back up and tested that rising price channel, almost got into it, or really almost tested it, very close to testing it on Friday. However, today, back inside there. What does that mean? Well, number one, when you talk about sliced Kerrygold butter out there, if we do take a look at the what the Dow has done is it's sliced through the 0.786 retracement and done it in a bold fashion here this morning. That says the Dow wants to go test those swing point highs back from August the 2nd. That level is 15,558. 877-927-6648. We'll be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is up 156 right now, trading out at 15,533 out there. S&P is up 14, and we're going to stop in and take a look at the Dow Diamonds. Now, as we take a look at the Dow Diamonds, take a look at what it did. You know, we're taking a look at the rising price channel inside the Diamonds. Now, the rising price channel inside the Diamonds is going to be different than the actual Dow because here we're accounting for all of the dividends and so forth. So, you know, you're going to see a difference as you take a look at price channels within inside the ETF structure versus the actual index. We can see here that the price broke out just barely out of that rising price channel as it was coming down and testing the swing point low. So there's a number of different patterns that we had that were going on here. Now that swing point low, that was a high volume low out there. That's from June 24th. Had volume of 14 million shares. As price got down and tested that area, was doing it on much lighter volume. Did it with 11 million shares on August 27th, 4.8 million shares on August the 28th out there. Was testing that swing point really for about 5-6 sessions. 4.6 million on August 29th, 6.3 million. Never enough volume to go ahead and bust it down. You know the expression, if you can't bust them down, it's going to go ahead and try and bust them up. Well, what is she doing right now? The Dow Diamonds are busting them up. And they are busting them up, and they're doing it with accelerated volume versus On the downside, we didn't have accelerated volume on the downside as it got to the swing point. And the swing point here inside the Dow Diamonds is the trading session from August 2nd. That has volume of 3.6 million shares. Well, guess what? Today, you gap up into it. We've been trading here for just under an hour, and you've done 1.9, basically almost 1.9 million shares. So we're going to just call it 2 million. We're going to round it off even, Steven, in 1 hour. Look, straight line would say that would be a 12 million session day. I'm not saying that's what we're going to do, but certainly you've done 2 million in the first hour. You are coming into that swing point. So much like we took a look at the SPY out there, and just the opposite of what we saw, because we get a lot of information from weakness out here. So as the diamonds were pushing lower into June 24th, they didn't have enough volume. You can't bust them down. You try and go bust them up. Well, it is busting them up with volume here today in that gap. It's a wide-ranging bar, in essence, that we have out there. So that is very powerful inside this move, even if, in fact, the Dow Diamonds closed below the August 2nd swing point level, 155.23. It's going to close. It would close below it with volume. That says that it should be back up there again, especially with the now. If it closes inside 155.23, says that it most certainly should go test 156.24 out there, but it's going into that area. So. Folks, on September 27th, Friday, September 22nd, that's not this coming Friday, that is next Friday, I'm going to be holding a one-day online workshop, Master Trader course out there, and all the details are on the homepage of TFNN.com. I'm going to go ahead and give you some of those details. Number one, if you sign up for the course, it includes 1 month of my newsletter service, Mastering Probability. So the actual cost of the course is an early registration period, which lasts between now and next Tuesday. So, you don't want to procrastinate if you're sitting on the fence and you're saying, I like what it is that Steve teaches me. I'd really like to understand all those tools so that you could have that financial freedom to be able to make those decisions on your own, understand what the markets are doing out there. Then now is the time to do it, because if you take a look at just simply trading over the course of the next year, about 250 trading sessions or so out there, it basically boils down to less than $2 per day with regard to the education that I'm going to be able to provide for you. And certainly you're going to trade for much more than a year out there. So, look, I know, let me ask you this. Have you ever done this? Because one of my favorite things to do is to grab a book, read a book. Now, when it comes to trading, read a book about trading, sit on a recumbent bike, and just simply pedal for an hour and actually read. What a great way to be able to feed your mind and feed your body by doing some exercise out there. So I love to be able to do that. Now, I don't know if you've ever done this, but, I've taken some books, I maybe learn a new pattern that is out there, and I get eager and ready. This is what I used to do, and I would learn all about the pattern. Maybe it was the A to B equals CD pattern out there, and I'm like, okay, I'm ready to trade that pattern out there, only to go ahead, wait for it to set up, trade it, and then the trade didn't work out. Have you ever done that before? Maybe you entered the trade too early, and so what I've made the last 25 years or so, my study has been all about pattern recognition. At first, it was just simply pattern recognition of individuals, understanding what each of our human needs were. Why? Because I had so many employees that I want to understand how I could meet their needs and how they could actually meet the needs of myself and the customers and the clients. So then that pattern recognition turned into understanding pattern recognition inside a stock chart out here. And so learning patterns and so forth. So I guess the point is that sometimes you can enter a trade too early, and I've made it my focus to understand little twerks out there, I saw that in the den, little tweaks out there that the books really just don't give you, and those are all the things I'm going to be sharing during that Master Trader course. Again, that is September 27th. Sign up by this coming Tuesday, folks. Take advantage of that early bird special. Save a couple $100. We'll be right back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up about 170 right now. S&P up about 15. We can see that first area of support has held here. No bullish reversal candle or anything, but the first level of support, which was the bottom of the gap up from yesterday, the low of 1692, that has held. And the VIX index here now coming off of its session highs. It's actually down towards its session low. So that is another positive or bullish sign for the marketplace out here. If we take a look at that right now, you can see the VIX is traveling out at about $14.12 out there, so that is a bullish sign. Remember, 1471, 1472 is a number that you want to be paying attention to. Of concerns out here inside the market, a little bit concerned inside the Euro-Japanese yen. As we take a look at this currency pair, it's trying to hold its gains out here, but the Euro-Japanese yen, this is the currency pair that tracks the U.S. stock market index better than any other currency pair out there. And it's very key that it stays above the level of the trading candle, the candle from September the 10th. The low there, 131.90. It's trading just slightly above 132.01 at the moment. We see a break below that level. And what that would give us, folks, that would give us some divergence, and divergence is something that we want to be paying attention. Just like earlier, we were taking a look at the VIX index here and the market moving higher. That was that wasn't sending the most bullish of signals out here, and this is the second one that we certainly want to be paying attention to, and that is the Euro Japanese yen out there. Let's go take a look at some of the other commodity sectors: gold, silver, light sweet crude, natural gas. Let's start off with gold here. Gold has a very important level of support that it needs to hold because you had a 1.68 expansion and a 618 retracement and a 0.786 retracement. That level's right around the 1304 level. If gold fails there, you'll see 1276. And if that level fails, you will see about the 1233-ish type range inside of gold. But so far, so good out there. As we take a look at silver, silver's one where we're going to really get our Q here. It's gotten back inside the rising price channel. We'll see if it's able to hold that level. It has made a 0.68 retracement off that nice candle that where silver really took off to the moon, and that was on August the 17th. So from that swing point low to the swing point high that came in on August the 28th. So an important level for silver to hold is going to be that 2080-ish range to 2042. If that level fails, we'll probably see a move down to about the 1960 level. That would be inside of silver. If we take a look at light sweet crude right now, light sweet crude trading out at 107.05. This thing has been trading in a sideways consolidation range ever since July 5th out there. The 50-day exponential moving average, that is the blue line going across my screen. We can see that that has acted actually as a support level. The first time was back here on August the 8th. The next time was on August the 21st. And then a third time here was on September 3rd. So if you ask me what is that level, the 50-day exponential moving average right around looks like 88 or so. Intra-session low has been 106.10. Let me make sure I'm getting the right 105.59. I didn't think it didn't sound right to me. 105.59 is the 50-day exponential moving average. The low so far 106.10. So sounds to me like that area has been tested inside light sweet crude. If that can hold, we'll see another run for the highs out here, somewhere between the 109 to 112 level. But it does have two consolidation patterns that say that light sweet crude wants to trade to the 114, 116 level. Let's go take a look at bonds, see what bonds are doing here. Bonds moving up, so you got the market moving up, you got bonds moving up. Trade each one separately. Bonds actually now are on a buy as far as I am concerned out here, and the buy says that bonds ought to run up to about the level. Let's first take a look at retracement areas. We're going to go from this consolidation that it broke here. We're going to go from the swing point of August the 12th, and that high was 135.02, down to the low out here on September the 6th, right around 128.12. The 0.618 retracement right around 132.16. If it can get up into that level, it'll get into the swing point. From August 28th, looks like about 500,000 contracts traded that day. If you can come in there with more than 500,000 contracts, that'll set up a run for the high of that swing point. That'll be in the 133.16, and potentially what we could be seeing here inside the 30-year Treasury, that's what we're looking at right now, would be another little consolidation pattern that it could be setting up. I don't suspect that we'll see bonds get back into the 135 area. That's where I would be looking to actually sell bonds if it can make it all the way back up. Why? Because it was traveling in a 2+ year consolidation area, and that typically sets up a move equal to or greater than the actual consolidation. That says that the 30-year Treasury wants to make its way down to about the 117 area. But what we can see here, we can see that there has been divergence as it's making lower lows out there. It has not had the conviction or the strength behind the move lower. What I also know is that the large commercials out there, they have taken a trade, longer-term trade, well, a trade, I don't know what the time frame is, but they are suggesting that the 30-year Treasury is actually going to rise out there, and I suspect it wants to make its way and test that consolidation level that it had broken through a while back, and that would take you into about the 135 level. What does that set up for the TLT? Well, you've got to really trade the TLT. You can kind of trade it off of the 30-year out there. If we take a look at the TLT, you can't use the exact, and you want to make sure that you're watching both out here, but it says that the TLT should bounce probably up into about the, I think it's, let me put these two charts side, darn it, that's not what I wanted to do. Let me see here what the swing point. So actually it is. So that takes us to the swing point of August the 12th. So it looks like August the 12th is where the 30-year wants to run to. Let me see where August the 12th is. Right here. So looks like the TLT would want to make its way up into about the 106.47 to 107.63 type range out there. Right now trading out at 104.20. That is on the TLT. Let's go take a look at natural gas, see what it is doing here this morning. Natural gas not wanting to give it up. It's trying to get up and above a resistance level. Key reversal session right here, which is the date of September the 5th out there, the high of which is 3.719. You get a close above 3.719. To me, that's a continuation move. That should act as support, and that would set up a move to the next area of resistance, which is going to be the swing point high of July 18th out at the $3.83 mark out there. That is on natural gas. Let's take a look inside some of the sectors within the S&P 500. Let's go see what we've got, taking a look at strength and weakness. Let's take a look at the largest weighting inside there, and that would be the XLK. So let's go see what the technology sector is doing inside the S&P 500. It's got to be right here in front of me. It is dead square bullseye right there in the center. So the XLK right now, that is trading out at about 32.34. The XLK traveling, testing the swing point high. It's already tested that. That is the August 14th level, 32.47, 5.2 million shares. We are up into that range here today with already 2.6 million shares at 10.42. So an hour and 15 minutes gone by. It's moving into that swing point with volume. It's not testing on lighter volume. So we might have a failure on price, but we are not going to get a failure on volume today, not unless everything falls off the planet of the Earth, and I don't suspect that is going to happen. The last swing point, last time the XLK was testing the highs here from August the 14th, it was doing it on the trading session of September 10th. That had 6.7 million shares, 6.7 going into 5.2. That was suggesting you'd be back up here. Well, guess what? You are back up here today, but it's already got 2.7 million shares going into 6.7. It should have that kind of volume here today again. That is on the XLK. So although it is given back price here right now, looks to me to be maybe a bit too premature out here. If we do take a look at a line that maybe now will become support, that's going to be the swing point from May 20th and that high of 32.31. That's what we're going to want to pay attention to inside of the largest weighting inside the S&P 500, the technology sector. That's the XLK. Let's go take a look at the XLF, the financial sector of the S&P 500. That gapping up this morning. Let's see what kind of volume behind its move out here. This had a nice little 1.272 butterfly. Did exactly what it's supposed to do pattern-wise, which is make a 0.618 retracement of that entire pattern. It did that. That number was 1948. It actually got down to a low on the session of August 28th. It got down to $19.35. You got to love that. It went ahead and made that move. Now on its way up, gapping up today into the resistance area of the breakdown that took place on August 15th. Now, that breakdown had volume of 62 million shares. Today, you're gapping up above that area, and you're doing it on 14 million shares. So an hour, let me do my math here, 14 times 6, you're coming into that area actually with volume. So it broke down with 60 million shares. It's at least doing a 60 million share a day, depending on how volume continues to trade today. And so that is important. If we take a look at retracements here, let's take a look at retracements off of the swing point high. That would be July 23rd down to the low that was put in here on August 28th. You can see that it gaps up above the 0.618 level. That says that $20.59 is gain inside of the financial sector, the XLF. That is right now trading out at 20.42. Let's go take a look here at the health sector, the XLV. I believe that may be the third weighting inside of the S&P 500, and that is up and above its swing point from the trading session of August the 1st. Looks like August 1st is its swing point high, 51.50, 8.7 million shares, and up and over so far with 2 million shares. So it's taking out its swing point high with volume. The XLV, pretty sure it's the third weighting structure. I think we go XLK, XLF, and then the XLV or the XLF and XLV could be flipped around there. So that is that you've got, that's a bullish sign. Of course, it is into the overbought territory, but it can move just a bit higher out there. That's on the health sector within inside the S&P 500. Let's go take a look at everybody's favorite. Well, not necessarily everybody's favorite, but it's the energy. Well, everybody has a favorite, and that's called energy out here. But let's go take a look at the energy sector. The XLE, I believe that is the fifth weighting within inside the financial sector. It is up and over the resistance area, that session from May 22nd. The high out there, 83.95. It is at 84.22. So if we take a look at swing points out here, well, if we take a look at that swing point, that had volume of 19 million shares so far today. It's done 2.2. So here's some weakness with regard to getting up over a swing point. No matter how I do the math, it's not going to exceed that. Of course, if we take a look at the swing point from August 1st out there, that's got 10 million shares. At least there, it's up and over that swing point. In August the 1st, August the 2nd, those are the swing points we're looking at inside the ETF structure out here. So we'll kind of use that right now. Not kind of. We'll use that as our benchmark from a volume standpoint. So you're looking at 10.6 million shares, and it today has done 2.2 million shares times 6, so it's got the volume there, so volume not looking too bad as it gets over a old area of resistance. That area of resistance now has been tested. You got up and over it here on the trading session of September the 11th. Did it with 10 million shares, so got over nicely. Came back and tested it and held on September the 12th, as well as on Friday. Now you're up and over it, so that is an important area of support now. Old resistance becoming new support. That is inside the energy sector, the XLE. Let me go over here, switch, and see what is moving and grooving in the markets here. You've got now CF Industry, CF Holdings, up $6.43. MasterCard up $6 and change. BlackRock up $6. Rock Tennessee up $5.48. Sohu up $3.80. Priceline up $3.50 right now. Those are Simon Property Group, SPG. In fact, let's go into the real estate area here. Boy, this is a, let me take a look at it. Where is it? I know I've got a little tab out here. Let's take a look at the U.S. home construction area, more properly put here. Let's take a look at the ITB. There's two nice patterns out here. Here you've got the Gartley buy, a 0.786 Gartley buy, as well as a butterfly, 1.272 butterfly, and a key reversal session. You got it all, really, quite frankly. That was in the ITB. That took place on August the 16th out here. Now we're seeing a normal retracement. Of course, what we are going to pay attention to is whether or not the 50-day ends up turning above the 200-day exponential moving average. Right now, those two are sitting basically on each other. The 50 days at 2183, 2190 is the 200-day. If you get a turn up there, that gives you a lagging indicator, nonetheless, called the golden cross out there. So this thing here had everything, quite frankly, that you needed in order to take a long position. Two patterns out here with a key reversal session, which also was a bullish engulfing pattern. Now let's take a look at a normal move on here. Is going to be from the swing point high to the low. That would come in, and you can see it's already above the 0.382, just slightly. That then brings into play the 2389 level inside of ITB out there. Let's go take a look at a couple of the holdings with inside the U.S. home construction area. Let's take a look at which one? Let's take a look at Lennar. LEN is the ticker symbol. Right now that is dealing with the 200-day exponential moving average. That is at a price of 36.07. It's trading right now, looks like at about 35.88 out there. Volume today on its move up. It's trying to take out a swing point. It's done 2.5 million shares, trying to take out the swing point from September 12th that had 7.2, so it's up and above it with volume. Dow is up 163. S&P is up 14. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. So let's see. Lead the charge out here in the markets. You got the Dow Transports. They're up about 1 3/10%. The Dow is up a little over 1%. And then you've got the New York Stock Exchange. And that's the biggie. That's up nearly 1% right now. Nice market breadth on that. You would have to see a total reversal today in order for the bears to take control of the market. That would mean you would need to see 1,986 or more net declining issues inside the marketplace. So at this moment, does not look like that is what is going to take place. Now, I do have the 30-minute chart here for the ES Mini on my screen. We're just peeking in on that because price came down and tested the gap out here. That gap up from late last night, not late last night, at the open yesterday, and that is the 1692 level. That's an important area for us to monitor. We've only seen one test of it, and it's not as if price pulled back to that area and then boom, it took off. In fact, it hasn't. The body of a candle, truly the essence of price out here. When you see this type of little high wave candle right here, which we saw coming into the 10:30 session, it's a sign of confusion out here. So even though it came back and it tested, it said, I guess it's confused because it knew it was supposed to test a support level. But what we are seeing here is another confusion candle. Whether it's a doji high wave, they're basically one and the same. They have relatively similar meanings out here. And we'll also take a look at volume. We had volume push off on that sell-off. Now, not a reason to sell or anything along those means out here, because everything is still pointing towards higher price. We took a look at, during the show, moving into swing points with volume. We took a look at that in the diamonds. We took a look at that inside the SPY. Maybe before we break, we'll go take a look at, before we hand the ball off to Basil, we'll go take a look at the IWM and the Qs out there. But right now, this is important to be paying attention to here, because you're not seeing any conviction, at least yet, behind this move. If, in fact, you see it close below 1692, that sets up move all the way back down to close that gap out at the about 1682 or so out there. So we want to pay attention. Let me go over and actually take a look at those two other ETFs that we didn't look at here. Let's go see what's behind those moves. That's going to be the IWM, the Russell 2000. Russell 2000 now taking on its most recent swing point high, which was August the 5th. That had volume of 14 million shares. We'll call it 15 million, and it's already done 9. So it's up and over with volume today. That's actually a bullish out here. Even though it's been selling off a bit as we speak, remember, that's not what the complete candle looks like. You've got to go ahead and take a look at, between yesterday and Friday's close and where it's trading at right now, and what that actually gives us is almost more of a high wave candle out there. But the IWM is up and over its swing point, or into the swing point, certainly the August 5th area, because it's trading inside there, the top of which is 105.63, and doing it with volume. So we take a look at the Qs. The Qs out here certainly struggling. You've got Apple, which is trading down right now about $11, I believe. So that's putting a little bit of the kibosh inside the Qs. LinkedIn is off 370 as well. But if we do take a look at the Qs, though, the most recent swing point was September 10th. That had 27 million shares. It's up and over that already with 9 million shares. So we're seeing volume inside the markets out here. And the VIX index, one other thing to be paying attention to, remember, 1472. If you see it close above 1472, we will have seen a reversal in the market. And that might even mean we would see a total reversal, which would be net decline in issues of 1986 or more. Other than that, just keep your stops tight, just like myself and my clients are inside our newsletter. We are long and strong, but we'll let the market take us out. We won't determine what the market is going to do. Stay tuned. Basil Chapman is up next. After Basil, we go out to Larry Pesavento, then Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Thanks so much, folks, for being here. Have a great Monday. Look forward to seeing you soon.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.